Good morning and welcome to today's webcast. Increase efficiency and safety with better internal and performance audits. Before we get started today, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
And with that, I'll turn it over to Mark to get us started.
Great. Thanks, Emily. Good morning or good afternoon, everyone, depending on your time zone. Thank you for joining us on this webinar on increasing efficiency and effectiveness with better internal and performance auditing. So we have really a great audience, participants who have registered, nearly 500, representing a wide range of organizations, including all sorts of not-for-profits, universities and colleges, state and local governments, and tribes. And a lot of what we talk about during this hour are going to be relevant to all of these organizations. They have lots of similarities. Some things will be a little bit different, but a lot of what we'll cover, you'll hopefully will feel familiar, especially the good things that we talk about, the thing, opportunities for improvement. If you don't relate to those, then that's not a bad thing. So thank you again for joining us. This is really the first of a 3-part series. This one is focusing on internal and performance audit. The second and third will focus on construction auditing and contract auditing, respectively, and they'll be over the course of the remainder of the year. So who's doing the talking? This is Mark Steranka. I'm a partner, and I'm our Moss Adams National Practice Leader for Internal and Performance Audit Services for the very same types of organizations I just mentioned, not-for-profits, state and local government, higher education, and tribes. I get to work with these organizations on a daily basis, and it's really all about helping them to do what they do better tomorrow than they do today. And you'll see that's really sort of the theme of what we're going to be talking about today. So, what do I want you to get out of today? Well, really, 3 things. I was going to try to make it 2 to throw you a curveball, but really kind of ended up being 3. So the first is thinking of internal and performance auditing, and I'll just refer to internal audit because that really encompasses what we're talking about relative to performance audit. Think of internal audit as kind of a Swiss Army knife. That it's something that can do a wide range of things to your organization, and that's really how we would hope you would leverage internal audit. So why you should think of it that way, 2, how do you need to engage internal audit in order to make use of it in that way to really get your highest and best use out of internal audit? And then 3, what kind of approach do you need to take to internal audit to really make that type of relationship successful over the long term? So those will be threads and kind of our learning objectives and what I hope you take away some insights from when we conclude in this hour. So our agenda. So we're going to talk about what we would consider the components of a holistic internal audit program, i.e. how do we inform what the composition of an internal audit program should be through inputs, how do we execute in a way that's both productive for the internal audit function and most importantly productive for the organization as a whole, and how do we demonstrate that we're making progress? How do we communicate to decision makers that, in essence, this is money well spent? Or what decision makers often say is, how do I know what my ROI is if I spend $1 on internal audit? Then we'll talk about some proven methods and tools that help make it a holistic approach to internal audit successful. And then sort of the mindset piece of it. What are some keys to success of really engaging internal audit in a way that is going to give you your best return on investment? And then I'll do my very best to leave some time for questions. I hope you'll submit questions as I'm talking, and we'll be more than happy to go over those at the end of the presentation. So we're going to have, I think Emily may have mentioned 4 polling questions. They're kind of front-loaded. And as she mentioned, need to answer these for CP. So we're going to start you out with a really tough one, get you warmed up. And that is, does your organization have an internal audit program? So please select yes, no, or I don't know. If on your screen you need to scroll down to see the black submit button, please do that. And then click on that button to submit your answer. And I'm going to give a little bit of time to make sure that you all have a chance to respond, and for the system to tally the results, and then I will share those with you. Being this is a very easy question, I'm going to dare to move forward. So about 57% yes, about 40% no, and about 3% I don't know. So for those of you who have an internal audit programs, hopefully we'll give you some insights to help them make them more robust. If you don't have an internal audit program, maybe this will help you formulate strategies for implementing one in the future. Okay, so now we'll sort of get started in earnest. So we're going to talk about 3 sort of components of an internal audit program, a holistic approach to internal audit. First is, how do we inform a program? How do we make sure that we're working on things that are useful to the organization and are really providing value and trying to sort of make the progression from a more narrow approach to a more robust approach? Second, we're going to talk about opportunities for improvement. So what do we see in the marketplace across the types of organizations that you all represent? And again, how do we get from sort of a more narrow response from internal audit in terms of helping an organization to get better to higher value and broader approach to things that can be addressed within your organization? And then finally, third, in tracking and reporting, how do we monitor and make sure that we're making progress and having positive impact on the organization through internal audit activities and helping you understand how to do that. This is probably one of the areas where organizations tend to fall short in terms of really monitoring what's being implemented and how that's impacting the organization, so how to take a more comprehensive approach to that, even though that doesn't sound like the sort of the most exciting part of internal audit. So we're going to hit you again with a second polling question. And this one, I think a little bit more. So does your organization have a current internal program that has a diversified approach, or would call it more holistic, that's really addressing different facets, risks, controls, compliance, performance, Or do you have what we'd call kind of a more traditional internal audit program where it's really sort of heavy on emphasizing risks and controls? So broader, yes. More narrow, no. Or if you don't have an internal audit program, select that option. And again, in this case, you might need to scroll down again to see the Submit button. So please do that. So make your choice and then select the Submit button. And again, I'll give you a moment here. See what we've got. So almost 45% yes, more holistic type of program, but 18% no, sort of a more narrow traditional program, and about 37% don't have a program. So, which is of course consistent with the prior slide. Okay, so let's talk about how we move from kind of maybe more narrow to more broad, delivering higher value, being able to demonstrate, in essence, kind of a return on investment. But in reality, the goal is, through internal audit, to help your organizations do what they do better, to serve their communities, their constituents, their students in a way that's more successful, and that really is the bottom line. So program inputs. We're going to talk about three types of inputs. Broadly, enterprise assessments, so sort of getting a lay of the land and understanding where focus should be in terms of internal audit, where there are opportunities for improvement. Bringing performance measures or KPIs, key performance indicators, into the equation. Again, if we take sort of a more narrow approach where we're heavy on controls, KPIs aren't going to be that informative. But if we're taking a broader approach to internal audit where we're thinking about performance, then KPIs or performance metrics can play a meaningful role. And then how do you leverage your ethics hotline if you have one in place? And we'll talk a little bit about what that's like for different organizations or how it works for different organizations. Let's go into each of these areas in a little bit more detail. So enterprise assessments. We're going to start a little bit broad, and then we're going to dive into these assessments a little bit more in terms of composition and types of assessments. But what's their role? So really kind of a handful of things. One is to gain the insights of leadership, getting what's on their minds in terms of how they view the organization. Informing both internal and external audit, because you're going to gather information that's potentially relevant to both. And in essence, whoever's performing internal audit services and whoever's performing external audit services should be having some communication anyway, but this is enterprise assessments are sort of a common platform of information that they should both be interested in. Determining how your organization is aligned with your strategic plan. We might not think of that traditionally as a perspective to inform internal audit, but really, the strategic plan should define what your organization is trying to accomplish, and an internal audit should be playing its role in helping the organization to achieve its strategic plan. And in a way, even determining whether what the organization is doing is in alignment with its strategic plan. And then finally, informing governance. Enterprise assessments, and we'll talk about this, mention this later, is also don't think of it as just informing internal audit. Done well, enterprise assessments can inform much more than just internal audit. It can provide a wealth of information to decision makers at multiple levels within your organizations. So what do we really mean by enterprise assessments? We've kind of been general so far. So really we think of two primary type of assessments being the foundational pieces of informing internal audit. The first is enterprise risk assessment, and the second is what we'd call an enterprise internal controls review. And what we're trying to do is canvass the organization broadly, not deeply, but again, to sort of get a lay of the land, understand how the organization operates, what's in place, what's not, and really trying to get a sense of where should we be focusing to give it the biggest bang for the organization in terms of improvement. And I want to talk about each of these types of assessments in a little bit. But again, you'll typically in internal audit, risk assessments are obviously a very common input to internal audit programs, but you don't often hear about enterprise internal controls assessments. You often hear about internal controls testing. But how do we figure out really what should we be testing beyond just what are the different types of controls? It's getting a sense of what is the controls environment at different levels of the organization and in different forms, so we can tailor an approach to internal controls testing that's aligned with sort of where the organization is and ultimately where we want to bring it to in terms of the ability of controls to serve their purpose within the organization. So, risk assessment. So we're missing a big opportunity if we're performing a risk assessment and just focusing on risks. So we really try to focus on both risk and performance when you're having conversations with your decision makers, your councils, boards, your departmental directors, your executive leadership. Why not talk about performance in addition to talking about risk? Because you're going to get a wealth of information that, again, can help inform an internal audit program. Don't miss that opportunity. And so within a risk assessment that addresses both risks and performance, kind of think of the foundation of your organization and sort of your key assets in terms of what you want to cover. So you've got foundational elements are your financials, your operations, your people, your buildings and property, your capital investments or programs, and your controls. And those 6 areas are really what makes your organization go. And then what we've got listed here are various functions within the organization. In total, if you delineate them all out, there's probably about 15 to 20, depending on how you group things, functions that make up how your organization operates. And what you want to make sure to do is touch all of those through an enterprise risk and performance assessment. And then on the control side, really thinking about, okay, what are the things that make up controls? And so policies, procedures, processes, systems, and being able to look at that across an organization and determine where policies and procedures exist, but maybe they're out of date, or maybe they exist, but there are holes or gaps in them, or maybe they don't exist at all, and how those policies and procedures align with your systems and your processes. And again, canvassing at a high, broad level across the organization, again, to figure out, okay, where do we start to define an internal audit program? And think of that program over a 3 to 5 year period. You're not going to address everything in any single year, so you're trying to figure out, okay, what's our prioritization? Where do we start and where do we migrate to over a multi-year period? Because that's how we should be thinking about internal audit is we're going to have coverage of an organization over a multi-year period. You can't be all places all the time, of course. Okay, we've got our third polling question. So we're focusing on risk assessment. So has your organization conducted an enterprise risk assessment within the past 3 years? And this is then really sort of prompt to, I'll talk about risk assessments a little bit while you're responding. So yes, no, or I don't know. And again, if you need to scroll down to hit the submit button, please do. Here I would just mention that I think risk assessments, typically the range you see is every 1 to 5 years. I think you probably most commonly see annually, but in those cases, they're very cursory. Think of a heat map. We all know that term and probably can picture what a heat map looks like. That's typically what you get out of an annual risk assessment, and you'll see we're going to talk about something that's much more robust. We tend to do them every sort of 3 years, give or take. The give or take usually varies by what's happening within the organization. If it's kind of very stable and static, then you might be 3 or 4 years. If it's very dynamic and changing, it might be 2, 3 years, maybe even be annually, depending on how much is changing. But again, you want to make those risk assessments informative and kind of not just, okay, yeah, that's, nothing's changed since last time, i.e. being last year. So let's see our results. About 41% yes, conducted a risk assessment in the past 3 years, 37% no, 22% don't know. I'm sure that probably aligns with the organizations who don't have an internal audit program, at least that being a fairly significant subset of it. Okay, so second area of input to internal audit programs, performance metrics. And you might be saying performance metrics, that sounds different, and it is kind of different. There aren't many organizations who really look at performance metrics to inform their internal audit programs. But if we're going to try to improve operational efficiency and effectiveness, what better way than to look at performance metrics or KPIs, key performance indicators, to inform us on how the organization is operating. So looking at trends over time, looking at performance compared to targets in alignment with a strategic plan. And so if your organization has a set of KPIs, you probably heard the term executive dashboard, if there are key metrics that have been defined that tie to your strategic plan, that's a great place to be looking at, okay, where are we not performing as an organization up to the standard that we're trying to achieve, to our targets? In those areas, perhaps what can we do to enhance either the efficiency or the effectiveness of performance in those areas? And so that's a great input in our minds to an internal audit program. And again, think of kind of the Swiss Army knife. We're not a one-trick pony, an internal audit. We're trying to be broadly serve the organization the best that we can. And this is a great way to deliver value to help organizations, your organization, determine how to operate more efficiently, more effectively, and leverage those performance metrics, which we'll talk about a little bit later in terms of what types of performance metrics. But we want to introduce that concept. And then third, your ethics hotline, if you have one. And this is a best practice. It's probably a best practice, an overused term, but don't think of an ethics hotline as just something that is a mechanism to identify issues, i.e., sort of a detection, a detective control, or a way to identify things. In reality, ethics hotlines are preventive measures because, and especially if you do a decent job of educating your organization that the hotline exists, educating your organization about what fraud, waste, and abuse is, which is the purpose of a hotline, to identify those situations, then the hotline becomes preventive because now you've built awareness that there is a mechanism besides mechanisms that exist, say, like going to your manager or someone else in the organization to report a concern, but that people are attuned to that. And so maybe I might think twice about doing something knowing that our culture of our organization is to be attentive to concerns and issues. And there are mechanisms that are safe to report things. And it's not like we're trying to create a tattletale culture in an organization. We're using prudent practices and tools. An ethics hotline is one. We have one organization that we're in discussions with a while ago and about their ethics hotline. They have an ethics hotline and they have an internal audit program, and they really saw no connectivity between the two. We're like, your hotline, it's not just really a mechanism for reporting concerns. That can give you trends also. If you get multiple reports on misunderstanding of how money is being used, misunderstanding of how decisions are supposed to be made, you may be identifying opportunities to improve policies or procedures or processes that, again, can translate into real projects or audits that you build into your internal audit program. So they can be very much informative sources to what you should be focused on within internal audit. So our fourth and I believe final polling question, another simple one: does your organization have an ethics hotline? Yes, no, or I don't know. And actually, while you're waiting, one of the questions that we often get is, what does the composition of calls or reports via an ethics hotline typically look like? And what we've seen over years and over a wide range of organizations is about 45 to 50% of those reports have nothing to do with the organization itself. It was my identity got stolen. I had an issue with my bank. The cable person, did whatever. Things or an issue with another organization that often happens in governmental situations. Excuse me. Instead of an issue with the local government, it might be with the city, it might be with the county or the state or something like that. So it's a concern, but they're going to the wrong entity. Another 45 to 50% are something to do with your organization, but something that you can handle through ongoing management and operations. So it's just an issue you can handle just in an ongoing course of business. And then a very small percentage, 5 to 10%, are something that even has the possibility of being fraud, waste, or abuse, which is ultimately what you're trying to identify via an ethics hotline. And then a fraction of that turns out being something that actually has to be sort of fully investigated. So often organizations think that they're going to get a flood of fraud-related calls when they set up an ethics hotline. We haven't seen that yet over many years. So your responses: does your organization have an ethics hotline? About 59% yes, about 31% no, and about 10% I don't know. So that was I think the highest number so far in terms of these questions of having an ethics hotline. Okay, so let's switch gears maybe to something that's a little bit more interesting. So what do we see in the marketplace? So working with the types of organizations that are joining us on this webinar, what do we see? What are some of the common threads that we see across the marketplace? And we're going to focus on three general buckets: risks, controls and compliance, and performance. So some of these, I think probably a lot of these you'll find familiar. They're probably to some varying degrees within your organizations, but I'll provide some insights on these. So succession. So we all know the impact of the baby boomers, and both public and private sector. So if we take our various types of business clients, we're going to find the same trend, which is baby boomers are leaving the marketplace, i.e. retiring. It's creating an impact for succession, protection of institutional knowledge, needing policies and procedures because that institutional knowledge is going out the door. But in the marketplace represented by the organizations on this webinar, you're even more impacted by it, because if you think about your institutions, most of you, you have strong benefits. You tend to have long tenured employees. And so you, on average, are going to have sort of a quote-unquote older workforce than the private sector, just meaning you're going to have more people that are towards the end of their work life than the private sector. Private sector is still being impacted by the baby boomers, don't get me wrong, but you kind of have a built-in reason for it to be even more so. And it's not uncommon to have an organization where literally 40% of their workforce is within 5 years of eligibility for retirement. That's a scary proposition. And so preparing for this is something that seems intuitive, but as organizations, we don't typically focus on that much. So this gets into recruiting, retention, compensation and benefits, succession planning. How do we transfer knowledge? All of those things. A classic would be, I've got this highly experienced person towards the end of their career. I've got, this baby boomer. I've got this millennial at the beginning of their career, and somehow I got to get these two to talk and transfer knowledge between them. We hear that all the time, and that's a wonderful challenge and opportunity, but that's inherent within topic of succession. The next two are related: asset management and deferred maintenance. But we're really still feeling the effects of the recession, the Great Recession, when we talk about capital, because a lot of our organizations, we utilized reserves back then to help with annual operational costs, and so we kind of depleted our reserves, if we even had the reserve levels that we would want to have in terms of our capital needs. And so we're still playing catch up just to rebuild reserves, again, even if we had them at the levels that we wanted to. And so having a good handle on our capital programs, and do we have complete condition assessments and a robust forecast, long-range forecast of what replacement needs are and what the associated costs are. So think of your buildings and your fleets if you have fleets, and your real estate holdings, although those don't necessarily require, of course, maintenance, but do you have, are you sitting on the real estate holdings that you still should be sitting on, or are there opportunities to now invest that maybe you didn't have several years ago? And how much of that program that you haven't been able to execute has translated now into deferred maintenance programs, and how well have we defined those, and are we budgeting for those, and how do we have time to deal with those? And so that's a big capital. Capital is just still a challenge, and we're still working our way, I'd say, at best, getting back to where we were prior to 2008. Technology is technology. One, it's a sinkhole, right? And we can all relate to that. But lots of organizations are going through ERP conversions and implementation. Talk about risk, right? So that's a great place to think about risk. But the impacts of that on your organizations in terms of your people, your time, updating policies and procedures with changing systems. Of course, we've all got cybersecurity on our minds, but are we thinking about cybersecurity both from a hardware, so physical penetration into our systems, as well as software, our applications, security of our applications? If someone does penetrate our hardware, then how easy is it for them to get into our applications? So sort of dual level of cybersecurity. So that's on everyone's minds. And then governance and management. And really thinking about that, in part it loops back to succession, but really kind of in a different way. But thinking about stability, continuity, thinking about the impact that has on our programs. So how a negative event, so we have a bad PR event, how much does that change our program, what we're doing this year? In higher education, a bad PR event can affect fundraising. In local government, bad events can affect how we serve our communities. Same within tribes and not-for-profits, fundraising, of course, that comes into play. And so how does how we govern and how we inform from management to leadership, our councils, our boards of trustees, our boards of directors, and how does stability at that level, how do we inform up, and how does the direction down in terms of consistency and stability impact our organization, and how much are we adjusting year to year to how that landscape's changing? Or in the ideal scenario, we have very consistent leadership, very consistent guidance, and so we're all about executing, and that execution pathway isn't changing. And how do we use strategic planning and key performance indicators to guide what we're doing? Okay, controls and compliance. So think of this in terms of your organizations, what you do on a centralized basis and what you do on a decentralized basis. And that's a great way to think about controls and how they work for you. So, for example, two highly typically decentralized activities, cash handling, grants management, things that happen across your organization, and they typically happen in different ways or in inconsistent ways. Inconsistency is what can translate into risks, potentially bad things happening, cash going out the door, grants not fully realizing our grants, having to give money back, losing money because we haven't had proper report tracking and reporting of information. So things that are typically decentralized. Accounts receivable, which can be decentralized, but can you answer the following question? What is your enterprise-wide AR outstanding over 90 days? Lots, and you might be surprised, or maybe not, lots of organizations cannot answer that question accurately. What is our overall AR? Because we have AR activities happening and coming in through just different systems, different processes and different systems. Purchasing seems to be an area where we're never quite caught up or resourced properly, so we can't get things out the door as quickly as we need to. We tend to overuse P cards to get things done. We tend to maybe not always use the processes that are required given authorities. So if I have an authority up to a certain level to just get 3 quotes, have I actually gotten 3 quotes? Or more likely, in terms of challenges, have I properly documented that I got that information? Or if in making a decision for a bid, we don't choose the low bid, and maybe we don't have to, but do we do a good job of documenting why? And so maybe the processes and decisions happen the right way, but we don't have good documentation as to why we did what we did. And you might say, oh boy, it sounds bureaucratic, but at the time it's important, and later when someone questions, it's even more important. And many of us live within a public records disclosure environment, and so having that documentation, even though it seems tedious, is important. Technology, I mentioned lots of systems conversions underway. That has a ripple effect of of course, cost in terms of investment, people's time. We often and typically don't do sufficient training on new systems so that they're being used to the maximum. When we come into organizations and talk about systems, whether they're new or old systems, almost never do we find a situation where the people in the organizations feel like the systems are being used to their optimal capability. There may be packages of the elements that aren't being used. We don't get training, so we're just sort of at the tip of the iceberg in terms of using its capability, even if we're using a particular function, maybe not using that function as much as we could be. And so we make these big investments, but we don't necessarily see through to them being used to the maximum that it can be. And then last, in terms of opportunities for improvement performance. So, one of the biggest opportunities is, and most of your organizations, not all, but I'm sure most, I guess at least 2/3, maybe 3/4 will have a strategic plan or some fashion of a strategic plan. And you should have one, because that should be your roadmap for communicating to your organization, where you are today, where you're trying to get to, and what's it take to get there from point A to point B. But developing, we said community outcomes here, but community or constituent or student outcomes, what are we really trying to accomplish? And, what does our organization's impact on who we serve look like at some point in the future, 5 years from now? And so how do we do a good job of really measuring what that looks like, so that we can, it's not just our output, what are we doing, but our outcomes. What are the impacts of the things that we're doing? Because that's what people can really rally around. It's not chugging out a certain amount of things. It's really what are we accomplishing. Kind of a little bit of the flip side of that service efficiency is really getting down to, again, if we're measuring things as organizations, the folks from what we see in the marketplace, we're usually doing a good job of measuring outputs. What are we doing? How much of X, Y, and Z did we do over what period of time, on time, within budget, but how efficiently we're doing that. So are we looking over a period of time at, cost per FTE or cost per capita and looking at a trend line for efficiency, or even a flat trend line of maintaining a certain level of cost efficiency, or are we trying to get more efficient over time? So we tend to focus on output, not necessarily efficiency. Policies and procedures, we don't have an organization that we've worked with that has their policies and procedures up to date. I'm sure that makes us hypocrites also, but policies and procedures, not sexy, not something we like to spend time on, but super important if you really do think about them from the perspective of how does someone, kind of like the next person up, know what to do. So go back and think about succession in terms of retirements. Think about just someone leaving your organization. Just think about someone not being there for a day, for a week, for a month, and how would others know what to do, and how would they know how to do it well. And if you don't have robust policies and procedures in place, then they're relying on what's in someone's head. Financial transparency, we're really typically the organizations on this call are going to be good about sort of the core financial reporting. But again, if we think about KPIs, truly key performance indicators, and thinking about our strategic plans and how well does our financial reporting really inform about how we're doing. And scrutiny in the public environment never seems to get less. And so the more that we can, if you kind of think about a dollar bill, and if you thought about if you break that dollar bill up into its revenue components and what does that look like, and then you break that dollar bill up into its expenditure components, what are each of those components, what do they accomplish, and then you think about the outcomes, the results of that, and then what are the impacts in the markets that you serve of those expenditures, and being able to sort of tell that story and do that in a proactive way instead of responding to inquiries or questions about, what are we really spending money on, and are these the right things to be spending money on? If you can tie those back to the strategic plan, then and you're spending money in accordance with your strategic plan, then at least for that moment, you're spending money on the right things. Should your strategic plan change? Well, they do change over time as the needs of the communities and constituents and students you serve. And then finally, employee engagement. This is probably the biggest area of opportunity because if you want to be a high-performing organization and you want to be good in all of these areas, reducing risks, strengthening controls, improving performance, then you need your employees engaged about what they're doing, not just punching the clock, I did my 8 hours or whatever, but I contributed to the impact in impacting the outcomes my organization is trying to accomplish. And if you can help your employees see that connectivity, how they have a role in that, whether big or small, then all these other elements are going to be working better. Okay. Tracking and reporting. So I'm going to be quick here. So tracking and reporting is an area, it doesn't necessarily seem like a lot of necessarily high value. Who's got time to do that? We're so busy trying to address all the things that internal audit identified as opportunities for improvement. Now you're saying we got to report on our activities associated with those. But if we don't, then we're not demonstrating sort of progress. We're not demonstrating that we're actually doing something about the opportunities for improvement that are being identified. And often that's where we kind of collectively fall short, and that sort of fuels frustration of executive leadership, of boards, of councils. They want to make sure that we're implementing the things that are being recommended. And so doing a good job of identifying, so we're again talking with an internal audit, the various internal audits that are happening within your organizations, whether you're calling them findings or observations, but how many of those are there, and have we responded to them? Have we completed them? In some cases, internal audit will play a validation role in validating that, yes, not only you accomplished the activity that responded to that finding or observation, but that response addressed the finding or observation. Because sometimes, let's just say it's a procedure needs to be developed, and let's just say for the sake of argument, develop a procedure to something related but different, or different enough, then maybe that doesn't address the finding, or you developed a procedure but it hasn't been adopted and approved yet. So making sure that there's follow-through and reporting on your progress, so that your decision-making groups know that this money is well spent, that things are getting accomplished. We're not just identifying, observations and findings, we're implementing recommendations. And this second slide is just showing, highlighted in yellow, the things that were accomplished over the prior reporting period. So think of this, reporting back to an audit committee. And the prior slide was a summary of the audits and how many findings there were and how many have been completed and how many have validated. And here showing some of the detail from one of the audits. Here were the findings or recommendations, and here are the ones that are accomplished. So that, again, so your audit committees, you're probably not at this detail level, your boards are informed that you are actually taking action on these opportunities for improvement. So I'm going to switch gears here to just talk about some ways that you can maybe adjust your approach to internal audit that will help you leverage internal audit more holistically and more robustly, and delivering higher value. So this first slide is looking at a heat map, again in a tabular format, and if you look at the sort of the middle column, the one with the red, so that's the internal audit assessment of risk. You can see a whole series of risk factors, and you've got ratings from that range from low to moderate, moderate to high. And typically that's what you get. So this one, that column is titled 2013 risk level. And then if we're doing risk assessments over time, we don't typically see this, but it's just one slight enhancement of a heat map. Well, let's show trend lines. So here we see the third column is 2016 risk assessment. So we can see where we've made progress, where we haven't. So now, at least as a decision maker, I'm seeing, okay, how are we doing? Are we getting better? Are we getting worse? Where are we flat? And so that starts to inform me a little bit more. But on the face of this, again, just a tabular format of a heat map, interesting, but it doesn't really tell me much other than a rating, and then here a 3-year trend. So then how do we add some more information to that? So here we've taken the most recent, so we've got the same risk factors. The second column, which is entitled Internal Audit, that's the 2016 risk level. And now we have management's assessment of risk. So part of adding to this information equation is not just internal audit conducting a risk assessment, but asking management to assess risk along the same factors in the same way. And what we're looking for here is, where do we have disconnects? Where does internal audit, we'll sort of say the risk professionals, view risk at one level, and management review it at another level that's significantly different. So high internal audit, low management, or vice versa, low internal audit, high management. So here an example, probably the biggest one to point out, procurement, high for internal audit, low to moderate for management. That's not the end of the world, or you want to shame on someone for having a different view, but now you're identifying, okay, where are we operating in a way that we're not really thinking about risks, and we might be a little bit more lax as an organization where we should be, or vice versa. And what you'll typically see is management typically rates risks lower than internal audit, which is totally fine. And again, but what you typically see is sort of the same proportionality. What management sees as the high end of their risk ratings, typically you want to see as the high end of internal audits. The actual ratings may be different. High for internal audit might be high, and high for management might be moderate, or moderate to high. But again, you're trying to find disconnects where there's something we're not seeing things the same way. So that's, again, so we're trying to add a little bit more value to a heat map. Now we're going to take a big step forward in terms of risk assessments and how you can really inform internal audit programs very insightfully, and if done well, inform much more than an internal audit program. So risk ratings are typically based on two elements, impact and likelihood. So I'll take likelihood for what's the likelihood of a negative event and what's the impact of that negative event. Those combined are the typical considerations for an overall risk rating. Here, though, we've added some additional considerations. We've added preparedness. So how prepared is the organization for a negative event if it should happen? How well do we think it would respond? What's the trajectory of risk? Risk is technically a point in time, but geez, that point in time was today. What's the trajectory? Is in a particular area, do we believe risk is increasing? Is it decreasing? Is it about the same, flat? That helps me as a decision maker have a better sense of risk. And then the survey rating that you see below those four top boxes, that's the management result to the survey. And then we add risk mitigation. So now what we're really talking about is what are considerations for an internal audit program. But again, you'll see not everything in here is something that you would necessarily do with an internal audit program. And that's okay, because a risk assessment that's addressing both risks and performance is going to give you all sorts of information about how you can improve your organization, some of which can happen and should happen within an internal audit program, but some can just happen anyway. You don't need necessarily internal audit to do it. And so you'll find when you do risk assessments this way, it's not just going to the audit committee. It's going to your board of directors. It's going to board your trustees, because the information in there is so valuable. And then the final piece there is residual risk. So if you took these risk mitigating actions, what impact would that have on your risk rating? So in this case, says if you were to do these 4 things, you may take your risk level from high down to moderate. So now we're really talking about information that really informs a risk assessment. I'm going to skip this slide, but that slide was just a write-up of things that I talked about, that telling the story of this function. In this case, it happens to be organization and staffing. We happen to have been for a higher ed organization. But again, trying to provide more information, not less, in terms of a risk assessment. In terms of internal controls, just thinking about, because this is a place where we tend to get lots of findings. They're typically results of testing, and depending on what's going on with your organization, these may be things that you can tackle right away or not for quite some time. So, for example, you may be planning to implement a new ERP system, and you may have issues, control issues with your current ERP, which is 15 years old, and you're not really going to be able to address those controls in earnest until the new system is implemented. So thinking of breaking down your internal controls findings into categories, and that's what we have here. So discrete tasks that are easily implemented. So identify your controls findings that fit into that category. category, implementation that will take time to develop and implement. So some of this, again, it's going to be long-term. Tell your audit committees, hey, we're not going to be able to address this for another 6 months, a year, maybe 3 years, maybe 5 years in some cases. Identify those that are require development or refinements to your policies and procedures, and maybe you can work on those as a group. Identify those because you'll have some that require training. Again, maybe you can do those as a group. And so all we're talking about here is really package things in a way that are digestible, that doesn't just become this long list of findings. Think back of the reports I was just showing for track and reporting. Not just this long list of stuff that seems insurmountable, but break it up into pieces that you can address in a programmatic and systematic way. And then finally, I'm going to conclude on two more slides. Performance metrics, again, just thinking of this in terms of you've got performance metrics kind of at multiple levels. Ideally, you want to be thinking about outcomes. What are we trying to accomplish as an organization? And then where you're typically going to have performance metrics that really help inform your internal audit program are those that are really kind of that middle tier, which focus on efficiency and effectiveness. How efficiently are we delivering services, whether they're internal services, HR, IT, finance, external services, to your communities, your students, your constituents, and so how efficiently and effective we are delivering those, how do we measure that efficiency and effectiveness, and where do we identify opportunities that can improve our performance for an organization. I'm going to skip this. I'm going to skip out the Hotline too and really just go, because I want to leave a few minutes for questions, philosophy and approach. So I can't tell you how many times I hear, we can't work collaboratively with internal audit because it can't be objective and collaborative at the same time. And that is a falsity. In fact, I would say it's a necessity to be able to do both. Internal audit has to be, by definition, objective and independent to function the way that you want it to in the organization. However, if it doesn't at the same time operate collaboratively with the rest of the organization, constructively with the rest of the organization, you're not going to get the bang for your buck. It's not going to be able to do for the organization what it could do. You have to be able to trust it. You got to trust it to be objective and independent, but you have to also trust it to, collaborative. Work together. It's the help me, help you. Help me, management staff, understand what you're doing. Help me understand what gets in your way. Help me understand how I can help you do something more efficiently, more effectively, more successfully. Constructive, again, being in a public environment, how we message things. Do we make someone look bad in the process, or do we encourage them to want to make a change? And so operating in a way that's conducive to getting things accomplished is really important for this type of activity really be successful in your organizations. So having that philosophy, that mindset of that actually we're a team. We each have our roles, but we're a team working together to help our organization better do tomorrow than what we do today. So with that, I'm going to conclude. Back to you, Emily, for hopefully a few questions. I left a whopping couple minutes.
All right, thank you. We do have a couple minutes for questions. If you have a question for Mark, you can submit that in the Q&A window now, or you can also reach out to him directly. Let's see what we've got here. Let's start with, how much should we budget for an internal audit program?
Two answers. One, the wrong way and the right way. I've heard before it should be some percentage of our annual spend as an organization. Those are two unrelated things. It should be budgeted in a way, I'll give you a general then kind of a specific answer, budgeted in a way that allows you to make an impact on the organization. So what makes an impact? So typically you want to try to get a handful, 3, 4, 5 audits done a year. You want to be getting around the organization, touching the organization in different ways, different types of the, different facets of the organization in different ways over time, over years. So what does it typically take to do that? General ranges, low end, $100,000 a year, high end, kind of $400,000 or $500,000 a year. It really depends on how much you want to get accomplished, but you should be thinking of it in terms of if you're just touching doing one or two projects a year, that's a pretty slow sort of progress to may have an impact, and so you want to be able to fuel that activity at a sufficient level where you are getting the benefits of it. So I'd say typically you're kind of in the 100, sweet spot, 150,000 to $350,000 a year is where you can get enough traction. Of course, it depends on the financial capacity of your organization, but somewhere in that range. Do you have another question, Emily? Maybe one more?
Let's see. We probably have time we can squeeze one more in here. What is the composition of calls received through ethics hotlines?
Yeah, and we touched on that a little bit, so that was kind of the 40 or 45%, nothing to do with your organization, 40 to 45%, something to do with your organization, but you address through ongoing, sort of management and operations, and then the balance being something that might be fraud, waste, or abuse. Another element of sort of that question, what's sort of the volume of calls? I would say over, again, many years and many organizations, calls tend to come in about 1 to 2 a month. That's generally, and I would call that kind of a trickle. We've never worked with an organization that's implemented an ethics hotline where they got a tidal wave. Sometimes you get little spikes when you have, sometimes depending on events that are happening in your organization, but overall kind of 1 to 2 a month, and that's very manageable, very digestible, and I would say reasonable. So I think we're at least a minute over, so I'm going to turn it back to you, Emily, to wrap up.
All right, thank you. And you're right, we are out of time, but I do want to thank you, Mark, for a great presentation today. If you had a question that we didn't have a chance to get to, we'll be doing our best to follow up with you after the webcast. And as a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts folder to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 2 weeks should you have any difficulty downloading it now. Here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. Thank you for joining us, and we hope you'll join us again next time.
Thank you.